altcoin speculation. What do I mean by that? Well, first of all, an altcoin is, in my mind at least, a crypto token that is not Bitcoin. So some kind of cryptographically designed digital asset that you can buy and sell through an exchange. You could potentially self-custody it in your own wallet. And it is in some ways a product of the free market, in that I totally and utterly believe that people should be allowed to do what they want with their money when they want. And this idea, for example, of like, you have to be a high net wealth individual from our perspective, some arbitrary amount of money by your name to access certain types of investment. That to me is crazy. Absolutely everyone should be able to choose what they want with their money. But here's where this gets interesting, is that altcoins, it's a very, very big difference between Bitcoin and altcoins, and it gets basked in, it gets bundled into this thing called crypto. And often people say to me, "Oh, Jake, how's the crypto going?" And as soon as they say that, I know they haven't understood that Bitcoin's this thing that's different to the rest. And to briefly dwell on like why that's the case. Well, first of all, to make a comparison, let's say you wanted to make an investment in a public market equity. So you could look at different companies that are traded through different exchanges, figure out, you want to go and buy one. Now, what do you buy? You're buying an equity. There's obviously a lot of regulation and legal precedent as to like what an equity actually is. And the idea of security is very well documented in commercial law. And there's something called the Howey test. It's a very interesting process. Like, how do you look at something and can you decide if it's a security or not? And there's an ongoing debate whether a crypto token like Ethereum is actually a security, and therefore is it dealt with in the appropriate regulatory manner. I don't want to go into that right now. The point being is that a publicly traded equity, yes, it's an equity, but is it an airline? Is it a mining company? Is it a fashion label? How much debt do they have? What's the price to earnings ratio? There's basically there's multiple different tiers of sophistication that you can have to analyze what these equities are. And yes, they might be bundled under the same name, an equity, but they're not the same thing. And you're buying something completely different. And that's just a public market equity. Then you can have private equity, whether it's super early stage angel investment or it's some kind of private equity fund. Even I would describe something like real estate as private equity. It's an individually owned asset. I'm basically trying to explain, like, it may be called an equity, but it's very different under the hood. And the same applies with crypto. It's like, okay, well, so how's Bitcoin different to crypto? Things like, for example, there's no founder. There's no insider team like the Ethereum Foundation that did a pre-mine and raised funds, sold themselves tokens on the cheap before releasing them on the public market. A more recent example of that is the Trump meme coin. 80% of the Trump coins are still held by insiders. And there's all these things called tokenomics where they are supposedly linked to the project for a sustained period of time, and their lockup is for 3 months or 3 years or whatever the case might be. It's kind of like fabricated scarcity. It's kind of like a management buyout clause when you see companies being sold and the founders have to stay working there for a period of time. All this goes to say that the difference between Bitcoin and crypto is an incredibly important thing to figure out. And it's as simple as this. Like, in my mind, Bitcoin is the future of money. It's the base layer that all digital transaction will be done from. Crypto is a collection of highly speculative software projects. And that's where the word speculation comes into this discussion. Before going down that line, some really critical points to hammer home with Bitcoin. Bitcoin's like key innovation is something that's so deep in the weeds of computer science. Like, of course, it's not something the average person knows about. It's something I didn't know about till I learned about it. And it's called the Byzantine generals problem. Imagine you've got 8 armies surrounding a city. Each army is operated by an individual general. If you take the city alone, of course, the returns are higher, but the risk is also higher. If all 8 armies combine together to take the city at the same time, then the chance of winning increases, but the returns are, you don't get to sack the city on your own. And what Satoshi Nakamoto managed to do by utilizing proof of work, which was a piece of technology built originally by Adam Back, and Hashcash as a way to avoid spam on email, he solved the Byzantine generals problem. So with decentralized consensus of software. And that's why you now have nodes, you have miners, and it's just the most extraordinary innovation that is constantly testing me in new ways. Where I'm like, oh, I didn't think about it like that before. And I encourage everyone, like, keep digging down this hole. It's absolutely fascinating. Anyway, Bitcoin hasn't changed in the way it was designed since it was launched in 2009. Now, that's very, very important. So the fixed cap of 21 million hasn't changed. And it's a system in which the rules don't change. So it doesn't matter how much Bitcoin you own, you can't change the rules. And this is absolutely key because the rest of the crypto market, they're changing the rules all the time. And they might decide to print more tokens. They might decide to get rid of some tokens. They might decide to make it more decentralized, less decentralized, faster, slower, cheaper, whatever the case might be. When altcoins are like just sprinkled right in front of your attention as you log into these large crypto exchanges, and then you've got the unit buy. So, oh well, I've got to pay 100 grand for one Bitcoin. Why don't I pay $1 for this thing over here, and maybe it'll do the same thing? And it's degenerate gambling. It is, honestly, that's what it is. Why do I bring this up, and why do I want to rant about it? Well, as I said already, I don't care what you do with your money, and that's exactly how it should be. But what's important to understand is that there are people out there that know that you don't know what you're doing with your money, and they're capitalizing on that. And it's difficult to see in some ways, but it does get quite nefarious in that anyone can spin up a software protocol. Anyone can do some kind of pre-mine where they sell tokens to a bunch of insiders on the cheap. They use that capital to then fund a good bit of marketing on a B2C basis, and suddenly you've got a Telegram group full of supposed people, but they might all be on the pay with early tokens, and they pump the price, and then retail comes in as this exit liquidity, and you're like, so they are literally just pump and dump schemes, and absolutely a lot of them are. So the way that I look at this, it's like, unless you've got your head around Bitcoin, don't even bother looking at the rest of crypto. And there's many people I've met in the Bitcoin space that are now full-time in Bitcoin, but used to be in crypto. They're really interesting too. I myself, I bought some crypto tokens. I was part of an ICO that completely, like, my money just disappeared, right? I didn't know what I was doing. And that's part of the process. You have to pay the tuition fees en route to figuring out that, it's really this Bitcoin thing I should be paying attention to. But from a kind of purely investment perspective, like, speculating on things is okay. And I want to bring into the story a guy called Luke Belmar. Now, shout out to Luke. We've never met. I've consumed a bunch of his content. Mark Moss is a big proponent of his work, and there's a few things that caught my attention. But first of all, he talks very succinctly about, first you've got to create wealth, then you've got to grow wealth, and then you want to protect wealth. And he's got this organization called Capital Club, and he's managed to grow it to something like 200,000 paying members globally. He's closed the application window from, as far as I can tell. It's been a content-led growth. So really cool how to use content to, like, drive attention to then, end up with paying subscribers for something. And I got an email from him today talking about how, like, he was so fed up with being the exit liquidity for, pump and dump schemes in crypto, and he wanted to, like, get himself an edge. And that's why he decided to kind of create the Capital Club. If I was going to build a pump and dump group, it would look quite a lot like Capital Club. It's like, okay, you've got a bunch of paying members that want to see the inside scoop on the next token that's going to go and rocket to whatever. And if you can time the entry and exit of that token, then sure, you can definitely trade that market very effectively and scoop value out. But my bet is they're all buying Bitcoin with that value. My other bet is it's not a bet per se, it's just observation, or this is actually speculation on my behalf. But if I was a token founder, I'd be going to someone like Luke Belmar and saying, look, you can have the inside scoop on this particular coin that I'm about to launch, market it to your buddies, and let's see where we go. Now, where this gets a bit tricky is I touched on the Howey test earlier. Now, again, this is kind of confronting in a sense as well, because of the idea of, like, believing in free markets. Like, why is there a regulator? Why is there someone telling you can't buy that company, or you can't buy this company, or you can't buy this debt? The bond market's absolutely massive as well, right? without getting too bogged down, I look at the crypto market now as something that's absolutely possible to speculate on. But I ask the question to anyone that's doing it, why? And the reason is like, oh, look, I can make a quick buck. Fair enough. And actually, there are people out there that trade interest rate swaps. There are people out there that trade, FX in lots of different locations on lots of different markets. There are people out there that trade classic cars. There are people out there that trade art. There are people out there that trade real estate. Like, people are making their margin somewhere because they're managing to arbitrage the information they have against someone else. But in some ways, they're all playing the same game, but they're basically just someone else is the exit liquidity. Haha, yoke's on you. And they get their money out. And it's kind of depressing in many ways. And you could equally argue this with the status quo financial system. It's like, okay, so let's say I'm a startup business that gets funded by Y Combinator. Okay, super successful, very famous, US-based early stage equity investor. They've got fingers in tons of different pies. Before you know it, the main VCs in Silicon Valley have jumped on the bandwagon. They pump the price of the equity over 2 or 3 rounds to like a Series C. The business may not be profitable. It's just all about growth, user growth, whatever metrics they inflate. Then, Chamath came out with these SPAC things, which are basically like a pre-IPO fund that was buying businesses that couldn't quite make it to IPO, and then actually go and list the company based on a whole bunch of like potentially phony data. Who knows? And the exit liquidity is retail, right? The retail market's now allowed to get involved in this, and you don't have to be regulated to buy these stocks. So in some ways, what happens in the altcoin speculation space is precisely what's been happening in other places. But again, to highlight, the way that an equity is actually a legal document is very different to a crypto token. And the amount of due diligence that's done on a crypto token to be listed on a crypto exchange is nothing like the amount of due diligence that's required to be done to list a company on a stock exchange, or equally for an angel syndicate to make an early stage equity investment. Because of my experience investing in lots of different things, I've been able to understand the different depths of due diligence that gets done. And there's just a number of red flags with the entire crypto space. And that's kind of depressing in a way, because it's very, I like free markets. Okay, cool. Look, by all means, try and raise money for this thing. By all means, try and improve on Bitcoin in some way. But like, what for? And if it is as nefarious as like, because I can make a ton of money off people that don't know what they're buying, that's going to come and bite you in the ass at some point, isn't it? You can speculate on whatever you want. You should be able to buy whatever you want. But in my mind, at least, I feel so grateful to have come to a point where I've really studied Bitcoin very deeply. And this is a different beast altogether. And you have to ask the question, what is money? And only through asking that question can you see, A, Bitcoin is just money, but B, all these other things are actually really poor forms of money. And so in some ways, there's an extremely strong ethical argument for Bitcoin being the best asset allocation you can make. Luke Belmar, go for it. Everyone that's part of Capital Club, go for it. I wish you the very best of luck. I'm sitting in a position where I'm not a member of the club, so I'm only kind of speculating from the outside. First of all, figure out Bitcoin. And then, with 10% of your investable assets, at most, start thinking about how can you beat Bitcoin? Okay, well, you might be able to beat Bitcoin by speculating in altcoins. You also might be able to beat Bitcoin by speculating on some very niche art, for example. Like, who knows? And that would be all about like, where do you have an edge? And to Luke's point, that's fair enough. He's like, okay, I think I can create an edge in this crypto thing, and I can then sell that edge to other people, and I can also benefit from it myself. But yes, just handle with care, ladies and gents. Handle with care.